Hello, everybody. It's Rob B here with Rob D, and this is your weekly Friday update, the new podcast that we don't know how long we'll run for. We have no idea, but we're here and we'll keep being here until you need us no more. Now, Rob, we've started a new tradition on how we greet each other on this podcast by asking the question, how are you feeling this week? So let us know, Rob. How are you feeling?
Such modern men, aren't we? So in touch. I'm feeling good. Feel good most of the time, anyway. But this week has felt the most normal for a while for me. It seems like obviously things aren't back to normal by any means, but we're almost like settled into the new normal now. Like last week, being stuck at home all the time just felt really strange, but I feel like I've adapted a bit to it now, just in a bit of a new daily rhythm personally. And also, I don't know if you've are sensing the same thing, but it seems like everyone else is in a similar place. Like the stockpiling seems to have stopped. Shops are a bit more normal. The markets aren't swinging all over the place as crazily as they once were. It feels like we're sort of in this now, and now we'll wait for something to change.
Yeah, everyone's accepted the new norm. I mean, on a personal level, I'm over it already, which is not great because it's probably going to go on for a little while longer. And I would like to work somewhere else other than my spare bedroom. But I don't think I'll ever appreciate coffee shops and the office as much as I ever have before when I walk into them for the first time. It's going to be such a joyous moment to work somewhere else. But hopefully that's not too far away. It has been a normal week, though, as far as normal can be. The most normal week so far, anyway, that we've had in a while. It's kind of, in terms of the coronavirus stuff, yes, there's lots of bad news out there, but there was before. It's like, so people are getting used to it. They are kind of just going, okay, well, we'll adapt. And I suppose that's what humans are brilliant at doing, is adapting.
Yeah, and there's this point that I've heard mentioned a couple of times, which I think is a really good one, which is there's only so much time that you can sustain fear and panic for. It's not something that you can keep doing for weeks on end, because as humans you do adapt, which is both good and bad. So even though we're seeing the same old pretty bad news every day, because it's the same pretty bad news as for the last couple of weeks, it's hard to work yourself up into a pitch of terror about the whole thing, which I think is contributing to this sense of people just kind of being used to it now, and which is contributing to the sense, I think, of it being normal. And I know it's horrible to think that, oh yeah, it's normal now that we hear about hundreds of people dying every day, but it kind of is.
Yeah, it is. And as you said, the markets as well, the stock market has kind of become less aggressive in its swings up and down. Now, as we look at this on Friday morning, the market is ending down for the week. It's down today, but it's not been as aggressive as it has been in the past. It's been more gradually down. Last week was up, though. If you looked at last week's numbers, by the end of the week, it was up from where it started. So things have settled a bit, but all these stocks, all of them pretty much without exception, are way down on where they were, like massive falls. I know we keep an eye on the property stuff a little bit more for obvious reasons, but you look at like Taylor Wimpey, a month ago, it was at 213, 215, around that level, and now today as we record it's 106, halved in value in a month. I just don't see it. I don't think so. And purple bricks is about 25% of what it was. It's around about 30. It was around about 110, something like that. Now it's about 30 pence a share. Massive falls. Like, and you look at them and you go, are all these businesses doomed? Is that it now? But realistically, certainly as far as Taylor Wimpey concerned, I can't speak for Purple Bricks because that's VC funded. But Taylor Wimpey owned land. They don't have a lot of debt, and they have a proven selling model, which is Help to Buy, which is definitely going to continue for when things start back up again. So is it worth half what it was a month ago? I very much doubt it.
Yeah, and I think all the house builders certainly most of the house builders have cut their dividends now. The banks have all got rid of their dividends, and that kind of helps because there was always the risk that would happen. So now that has happened, you think, well, clearly that's all priced in now, which makes certain shares look like even better value. I tend to look more at the indices than individual shares, and so you look at the FTSE, and that's at about 5,400-ish at the time of recording. The question, of course, is like, well, what happens from here? Does it get worse or does it get better? Does it get worse? Is there more bad news to come? Or does it gradually, very gradually, get back up where it was and then eventually beyond? We know eventually it will get back up there, but does it go down before it goes up? It's a really difficult one to say. It feels to me like so much bad news is priced in. The famous last words, I can't see it going down too much further. What I think is interesting, though, is when you look at the S&P 500, which is broadly speaking the American equivalent, that has fallen in percentage terms in roughly the same ballpark as the FTSE, but it was valued so much higher to start with. So before this all happened, everyone was talking about how the American market looked really expensive. The UK and the European markets were looking relatively cheap, and they've both fallen by the same amount. So the FTSE is now given up at least 5 years of gains. Don't have it in front of me. The American index is back down to where it was about a year ago before it had a really aggressive year. So to me, and I don't know if I'm missing something, I might be because I'm not a keen observer of these things, it seems like there's something wrong with that disparity there. Either the UK and European markets are being too negative, or the US market is taking it too lightly. It's hard to know which is which.
It is, but what's not hard to notice is how volatile the markets have been over the last few weeks. And this is a point, Rob, that you've raised, which is that while the markets are volatile, and you'll have sharp movements on any piece of news, the property market isn't, because it's hard to be volatile because you can't just suddenly sell all your property tomorrow if you chose to. And in a way, the property market is a lot more boring to look at right now in terms of price movement because it doesn't go surging up or down. It's gradual. But that, in this kind of crisis, is a good thing.
It is. You can't panic sell your property. You can't do anything with your property at the moment. You don't have big institutional players moving the market. You can't short sell property. All these things contribute to it being a lot more stable. Now, this is a really bizarre situation because the property market has basically stopped, and when it comes back again, you don't know at what level it comes back. So there's still plenty of unknowns around it. And there's lots of people in property who are going to be very nervous for various reasons at the moment. But when something like this happens, it definitely looks better to be in property.
It does. But there is a rare exception to this. Again, something you spotted, Rob. But there was a way of trading in property. Well, there's more than one way. But a common way of doing that is through a REIT, which basically is just a property fund. And REITs are traditionally known for commercial property. And understandably, those REITs have taken a hit because commercial property looks a lot less attractive right now with, businesses being at risk. But there are REITs out there which specialise just in residential property. So you can trade property. And the volatility there has been incredible. The numbers that you've been quoting to me over the last few weeks have just been fascinating.
Yeah, so for anyone who doesn't know, a property fund, it trades like a company. So it issues shares, and those shares are bought and sold, and that affects the share price. And then underlying that, they've got the actual value of the buildings that they hold. So generally speaking, you'd expect all their outstanding shares to be roughly equal to the value of the buildings they hold. But sometimes those two values disconnect. I'm going to mention a couple of particular funds, and I think it's important to say, not making any particular recommendations about anything, just mentioning them in passing. But there's one fund called the Residential Secure Income REIT, and it invests primarily in social housing and retirement housing. And at one point, its shares were trading at a 33% discount to the value of its assets. It's now come into about 17%. But you look at that and go, okay, you don't really know what the value of its assets are now because property is so hard to value and it takes a long time for things to show up in the figures. But has it really come down by a third? Seems very unlikely when you're talking about things like social housing, which are not exactly in abundant supply and not exactly being traded at crazy multiples. So it is really interesting that you introduce the ability to buy and sell really quickly and easily, and property takes on this volatility that it wouldn't otherwise have. And hey, there may be very good reasons why these companies are hard hit that we're not aware of, but it looks to me that you get these situations where when everything's bad, everything kind of gets sold indiscriminately and people just dump a load of stuff. They go, oh, real estate, that's mostly commercial. We don't want any of that. It all gets ditched. And sometimes fairly so, but other companies get taken down with it where they really shouldn't be. That creates opportunity. I'm not smart enough or educated enough to know what those opportunities are because it's not really my market, but it is really interesting.
Yeah, and the volatility down was there, and it went down by a third, as you pointed out, but then it was recovered to be only 18% down. So in a space of a few weeks, property just isn't that volatile. But like you say, Rob, when you introduce emotion, and whether that's fear or greed, whichever way you look at it, it then creates volatility or can create volatility. And that's exactly what's happened here. So the fact that you can't do that with property, and the property market is much more difficult to transact in right now, is a blessing for all property investors.
You wouldn't have thought there were many blessings to being in property at the moment, though, because we said on the podcast before that the majority of the investors and the landlords that we talk to in the course of running our businesses are very understanding and they're being very good about it. But there is a fair bit of moaning around at the moment as well, Rob.
Yeah, we've touched on previously that a crisis really exaggerates who you are, and we have seen the good in people. But unfortunately, and it's not just in property, but unfortunately, you also see it the other way where people reveal who they really are, and sometimes it's not nice to see.
Yeah, there's so much great stuff that we're seeing in terms of people doing their bit and helping everyone out. But there's also seems to be a small sector of people who almost like they want to be personally bailed out or personally compensated for any loss that they might have experienced. And I think I've said on the podcast before, but if you're in a position to be worrying about your investments, then you're so lucky because it means that you've got investments. And that's a position that most people aren't in. And I've had emails from people saying, oh, well, what am I meant to do? I'm not an employee. I'm not even self-employed, so I can't claim there. But my tenants can't pay the full rent, and so I'm losing income. So, well, yeah, I mean, that's how it is. If you're in a position where you're living off your rental income, then you're in a really great position, and your business needs to be somewhat robust to that. I know it's really hard because we're in a situation where everything's dried up in a way that no one really could have expected, and that is going to put some people in a really difficult position. But the problem I have is the moaning about it and the kind of the expectation that you should be made whole by the government somehow and you shouldn't suffer any loss. Almost everybody is going to lose as a result of what's happened. It's a pandemic. Of course, everyone's going to pretty much lose, but some people are going to lose a lot more than others. And on the whole, and of course there are exceptions, I think we're in a very fortunate position in this whole thing.
Yeah, we are. The people are just lose touch with reality, don't they? And like, how can they expect to have zero downside when they've had so much upside in their life? Being in the position you're in is a privilege. It's not a right. I don't know why people feel like, oh, I've got to this status, this level point, it now must be secure and guaranteed. It's not. And it's equally as it goes up, it can go down, and you will have ups and you will have downs. That's what we call life, whether it's life in general or life of investments. And to have the audacity to think that you should always have it the good side and you should be somehow compensated or saved from the bad, it's just absolutely ludicrous. I don't get those people. I don't want to surround myself with those people. And I hope you didn't reply to the email. Right.
I'm glad you joined me on that rant. I was feeling like, oh, I'm being a bit of a, but no, you're there with me. That's wonderful. But we've had to.
That would have gone straight into the bin, that one.
But we've had to make some tough decisions as well this week.
Yeah, we have. With our team, we made a decision to put about 20% of them on the furlough scheme, which is, if you don't know, it means the government will pay 80% of their salary up to $2,500 a month. And if you choose to as a business, you can top that up further. We're in a very privileged position that we are going to make sure that all the team who have been furloughed are going at 100%. But Rob, what was really interesting is when we reviewed this and go, okay, it's a sensible thing to do as a business now, like review which jobs would kind of find a work for people or not doing their core roles as they should, or where there's more than one role and the amount of work there is now just enough for one person, possibly. When we looked at it all, we're very much still a business that is close to operating at capacity. Yes, there are some obvious things that we can't do right now, like viewings for properties, because we can't get in them. But 80% of the team, that's what we need as a minimum, really, to operate, because we're still managing properties, we're still sourcing investments, we're still working with investors, we're still putting out podcasts, doing all the content. There's a team needed for all these things, all these activities. And it was kind of reassuring, actually, to look at it and go, you know what? We are very much still in business. We're very active and we're still doing the things that we need to do to be here in the future as well. And not every business is in that position, and we're very fortunate.
No, it also shows we're running pretty lean. So I think it's easy when times are good to end up expanding in lots of ways that you don't necessarily need to. So you could look around and go, oh, what are all these people doing here? What are they doing? We don't need them. But actually, we do need all of them and more, which is why we're still hiring. And temporarily, yes, we're looking to try to make some savings where we can, but we couldn't cut it back very far because, like you say, it is all still going on, and many parts of the business are actually busier than usual. So the care team, who deal with getting deals through and helping people with their mortgages, are even more flat out because there's so much change going on there.
And Rob, I want to touch on a point that you mentioned there, that we're hiring, because that comment alone probably confused people. But that's where we see us being up later in the year, is what we're doing now is we're still going through the recruitment process and saying to people, as soon as we're allowed to open our offices back again, you've got a job, you can come and join Property Hub. And that, I think, shows our mentality of where we think we're at and where we're going to be at in the future. And this is not based on, crossing fingers and hoping. This is us. The mission is survive. It absolutely is surviving. And those people who have been furloughed, they're going off on their own personal development and training stuff because they had a place. The team will be larger because all these hires will come in as soon as we can get into the office. We are very much looking at the future still with a glass half full.
Yeah, and the way that the team have reacted to some of the challenges and the changes we've had to make has been fantastic as well. And morale is still great, as evidenced yesterday when we had what we call our group conferences. So every quarter we get the entire team together. Normally they're spread across 2 different offices and there's some home workers. So it's really important that at least quarterly we get everyone together to do some learning, do some team building. And of course we couldn't do that this time, so we had it scheduled for yesterday. We ended up doing it virtually, did it over Zoom with about 50 of us, with what I would describe as mixed success. We had the karaoke, of which less said the better. Karaoke sober is never a good idea. Sober karaoke over Zoom just doesn't work, does it?
No. We didn't get through a whole song. Krista, who set it up, cut the music halfway through the first song in tears of laughter, which wasn't a critique of the singing. I don't think it was. I think it was hard to keep everyone in sync. Being remote, people's internet speeds being a bit different.
Well, I very much hope that by next quarter we're all back in the office and able to do it in person. But if not, we know what we will not be doing for our next virtual conference.
On that note, we know what we'll be doing next week. We'll be back with Ask Rob and Rob on Tuesday. Of course, the main podcast will be back on Thursday. And then another market update, you lucky things, next Friday. Yes, we know it's Good Friday, but we'll still give you one. Until then, take care, keep safe. Bye-bye.